I can't just tax all the Bitcoin in California. It'll move to Wyoming. It'll move to Singapore. It'll move to Malta. And at the end of the day, you can tell everybody to go themselves. You can put it in your head, memorize the freaking key, right? And it's here. And then, the classic Bitcoiner response is, oh, yeah, my Bitcoin, I lost it in a boating accident. You ever heard that phrase? It's kind of a trope, but what it means is, at the end of the day, if you push me too far, I lost it. It's gone. Sorry.
That's it. You're
Tax
right.
that.
Oh, tax that indeed. Happy Friday, and TGIF members of the Altcoin Buzz Army. I've got a smile on my face. I know that we are in the midst of this market calamity. That's how some see it. I see it a little bit differently. We'll get into all of that. We're going to kick off this video with a look at all of the precedents that allow me to stay calm in these kinds of situations. If you're new to this space, then I think understandably you're feeling a little bit stressed out right now. But rest assured, the message in a nutshell is that, although this was a rough tumble that we've had in these last 24 hours or so, it's not uncommon in the cryptocurrency space. We're going to be discussing that. I'll give you guys my point of view. We'll attribute some reasons as to why this is all happening. Yes, it does have something to do with the capital gains tax increase, or at least the proposition and the proposal to do so. I'll let you know what I'm on the lookout for as far as projects that I'm keeping in mind at these times during the dip. We'll kind of discuss a little bit philosophically there what Michael Saylor alluded to at the top, is that you can tax anybody into oblivion, but they have a right to relocate. They have a right to renounce citizenship. And so I don't think that's the solution at all. I'll give you kind of my take without getting too political, hopefully. We'll also revisit an old favorite that we discussed, XinFin. If you were with us a couple years ago when we had the podcast long-form discussion Altcoin Buzz channel, we interviewed David Freuden of XinFin. And in many ways, that was a precursor to what Leia is doing right now with the Spotlight interviews. We're going to revisit that project because we're still very bullish and very excited about it. We'll also be covering a few other projects, as well as kind of giving you guys our sense of what's happening at the macro level. It is not all doom and gloom, not by a long shot. Guys, if you like this kind of content, Bitcoin, blockchain, cryptocurrency, and altcoin coverage, of course, then be sure to like and subscribe to Altcoin Buzz. All right, I understand that for many of you, this is how you're feeling inside, even if you don't want to look like this individual here. Maybe you're holding your emotions in because you don't want to appear this fragile necessarily. Look, I mean, I think at one point or another, we've all had that kind of reaction. So don't feel too much shame. It is quite normal. What you're seeing right now, especially if you're used to other asset classes, because we're going to be discussing the news that is affecting not only crypto, but the other asset classes. We'll be discussing the S&P 500, Dow Jones, NASDAQ. All of these took a hit. All kinds of indices took a big hit. Again, on this proposal of nearly a doubling of the capital gains tax from 20% to nearly 40% that Joe Biden has proposed. The difference is that in the cryptocurrency space, number one, because unfortunately we're over leveraged, but also number two, because we're less mature as a space and probably a little bit more fickle, the impact is so much more severe. Like, you're going to feel tenfold either the upside or the downside movement when, there's either positive or negative news. So again, don't feel too embarrassed if you feel this way, if you sound like this individual, because the first time around can be rough for many of us. But I want to assure you guys, first and foremost right now, that this is actually, totally par for the course if you look at some of the other precedents that we've seen over the years. So here we have Shehan Dilara, Bitcoin bull market in 2017. Let's enlarge that a little bit. 6 corrections in total of 30 to 40%. And there were many more than 6 corrections, but a full 6 of them were 30 to 40%. To put that into perspective, yesterday's correction, or whatever you want to call it, yes, certain altcoins were over 30%, but Bitcoin only really corrected in the range of maybe 25, 26, 27%. So it's actually a smaller one, as painful as it may have been. It was a smaller correction than a full 6 of the corrections that we saw in 2017. The other observation here is that those 6 corrections were followed by an average gain of 153%. I'm not suggesting or guaranteeing that we're going to now be followed by 153% gain in Bitcoin or the crypto markets, but that was the case back then. I think long-term things are going to be just fine. In other words, corrections are normal. Bitcoin archive here. Bitcoin bull market in 2017. Again, 6 corrections followed by an average gain of 153%. We're kind of repeating the same things because for those that are new to this space, and look, there are many of you, congratulations on deciding to enter crypto. We welcome you with open arms. It's a big tent after all. It's a big family. But don't be spooked out of it this way, and don't buy high and sell low just because now you're feeling the FUD, the fear, uncertainty, and doubt. Wrecked Capital with another perspective. In 2017, Bitcoin had 18 pullbacks in total, including 5 major corrections, whether it's 5 or 6, I guess is a matter of some debate. But 5 corrections here, according to Wrecked Capital, between -30 and -40% dips. In 2021 so far, Bitcoin has had 5 dips, all in the -14 to -26% range, but one major correction of -31. So just one major correction compared to 5 in that 30 to 40 range that we saw 4 years ago. Bitcoin is currently down 27% since its $65,000 highs. This is only the 7th pullback, again, comparing that to 18 pullbacks that we had in 2017. Also here with this perspective, in 2017, a new Bitcoin bull market correction would occur every 50 days or so after the previous correction ended. Interestingly, the difference in amount of days between the 2017 Q1 and Q2 correction was 79 days. In 2021, this difference between Q1 and Q2 corrections was 81 days, and you can take a look at the charts here if you're so inclined. As always, guys, if you're new to this space and maybe you're unfamiliar with some of the stuff, of course, we blast through a lot of these news items. I link to everything in the description below. You're free to peruse it there at your leisure. The point is that when in doubt, zoom out, realize that this is kind of normal. Yes, it's painful. It is normal. You got to have thick skin in the crypto space. And in a moment, I'll be kind of giving you guys my philosophy because as always, and this is just very subjective. This is just my thinking, my mentality, not financial advice. But the way to really make money and accrue significant assets is to buy up those assets when blood is running in the streets. This is a fire sale, in my opinion. We'll get to that in just a minute. A lot of the market is down, no doubt about it. Total market cap now below $1.9 trillion. Oh, that's painful to see. Down 10.9% on the day, unfortunately. Bitcoin down double digits. Most projects pretty much across the board, of course, with the exception of Tether. But just about everything, as you can see here, down double digits. Some are bleeding more than others. Some were bleeding to an extent that I just thought was ridiculous. And so I scooped up a few projects, I guess, at about midnight last night. I'll discuss those in just a moment. But as you can see here, the market, of course, follows Bitcoin for better or worse. And that was certainly a bloody ordeal. So we're bleeding at this point. There's no question. Now, what do you attribute this all to? Well, there are a couple, I suppose, technical reasons, and I'll leave that to the chart analysts and those that are more oriented towards that kind of thing. My contention has always been that, yes, while chart analysis is important, big news affects more crypto much more significantly, and that's what I tend to follow as much as possible. So despite the fact that, we had a little bit of momentum loss on the charts, I do acknowledge that, combined with the fact that you had these capital gains tax increase proposals, I think that was the major variable that really, unfortunately, kicked us while we were not down, but while we were pausing, maybe pausing for breath, There's also this story out of Turkey about the crypto exchange CEO that's gone missing, that's perhaps pulled an exit scam. That is that's not insignificant, but compared to what we're discussing today, I would argue that it is insignificant. Like, it's something that obviously we're not encouraging, we're not standing for that, but in the grand scheme of things, it's not something I want to spend time on in today's video just because it's not as relevant as some of these other factors that we're looking at. Okay, so Bitcoin here on Coindesk.com drops below 100-day moving average as selling picks up on Biden's tax plan. Bitcoin falls as Biden's plan to raise capital gains tax hurts risk appetite. There are a lot of reasons why you probably shouldn't be shouldn't be concerned about this rather, but the market is fickle. And unfortunately, we have a herd mentality. So whether or not this capital gains tax, again, it's a proposal. It's not something that's been established. And whether or not it applies to you, I think, It doesn't apply to most people, but whether or not it applies to you, it shouldn't have had this impact that we're seeing. Quote, the market has been trading extremely risk on due to Federal Reserve's liquidity boosting policy that supported risk trades. Now the reality of the Biden administration hits and the market is going to start worrying about taxes and regulations. That's what Philip Gillespie thinks, CEO of the over-the-counter liquidity provider B2C2 Japan. And that's what he told CoinDesk. As per the New York Times, President Biden is planning to roughly double the tax on capital gains or proceeds earned from selling assets. Currently, the capital gains tax is 20%. He's proposing a 39.6% rate. So that's nearly a doubling, nearly 40%, which would be an exact doubling. I can't recall a proposal where a tax hike has been so aggressive and so sudden. Like what happened to a 5% tax increase or a 10 or a 15 or a 20 or even a 50% tax increase would be more reasonable than a nearly 100% tax increase. I don't know. It just strikes me as an overreach. The new rate will be applicable for people earning more than $1 million a year. And that's kind of an important point here that I think is being lost in the sensational headlines and whatnot. If you're not earning more than $1 million a year, then this doesn't apply to you. The fact, however, is that there are a lot of big fish out there, a lot of whales and maybe manatees and dolphins and all kinds of aquatic marine life that are, perhaps in that $1 million plus bracket, or they're close to it. And they're the ones that are moving large sums of money, investing large sums of money, sometimes divesting large sums of money. So this is that kind of news that triggers them. Even though it's not established, even though it hasn't been determined or defined or agreed upon, it's just being mulled over, but it is being proposed and it's a big jump and it's scary to some. As I mentioned before, this is affecting all kinds of different markets. We're on marketwatch.com here looking at the S&P 500, which just opened at the time of this recording. Looking at the 5-day chart here, you can see it's down, but it's not down to the extent that cryptocurrency is. Various indices did take a hit after this, again, tax proposal, this tax hike proposal. But the S&P 500, the Dow Jones, the NASDAQ, Wall Street, not nearly suffering to the extent that crypto is. Again, whatever kind of the rest of the world feels on a good day, on a bad day, just multiply that like tenfold. Like we operate an order of magnitude with more intensity than really other markets out there. Everybody's covering this, of course. You can read about it on aljazeera.com. Biden to propose nearly doubling capital gains tax for the rich. And, if you're not part of the rich, first of all, $1 million, earning $1 million a year is definitely different than having $1 million of net wealth. I think if you're a millionaire today, personally speaking, I think that places you kind of in the middle class. I think being a millionaire is not what it used to be. And it's going to get tougher and tougher, I think, to make ends meet as a millionaire in the next few decades. That's my personal opinion. That's kind of what attracted me to blockchain and decentralization in the first place. But if you're earning $1 million per year, that's a different story. Then you are definitely wealthy. Anyways, you can read about that on aljazeera.com, here on financialpost.com. Biden is eyeing a capital gains tax actually as high as 43.4%, according to some reports. But again, only for the wealthy. And what's kind of frustrating is that even if you're not wealthy, even if you're not earning $1 million a year, even if you're nowhere near that, because of the cascade FUD effect, it still trickles down and affects everybody else. So you could be trading a few $1,000s worth of assets. Your portfolio took the same hit as the whales out there, which is always kind of frustrating. Increase would push taxes on investment returns higher than on wages. You can also read about it here on ca.finance.yahoo.com. Stocks drop on Biden plan to lift capital gains tax. Markets Watch. I don't want to get too political here, but it's a little bit concerning that this proposal is even out there for me. I've discussed this briefly in the past. It's not really content that I think is necessarily something you tune into on this channel. You don't tune in for my political opinion, so I'm going to keep it brief. But this idea that, there's so much deficit spending, not only in the United States, but, in my country of Canada, a ton of deficit spending all over Europe, all over the world, really. The M1 money supply in just about every country has never been higher. And I think there's this slow creep right now, this slow collective kind of point of view or opinion that we can just tax our way out of the problems that we're facing financially. In my opinion, the problems are much deeper, they're much broader, they're much more irreparable. And you have what really strikes me as almost this communistic thinking that we can just tax the rich into oblivion and solve all our problems, when at the end of the day, foundationally, none of those problems are being fixed. It's very short-term thinking. If you're totally, new to the idea of, or new to this discussion, and perhaps you are on the side of high taxation to solve some of these fiscal and monetary macro level problems that we're having, just run the numbers. Just do some basic arithmetic, some basic mathematics. If you were to tax the richest people in the world at a 90% tax bracket, number one, they don't have those assets in terms of liquid wealth. They have them in the form of properties and stocks. So you can't tax the rich besides capital gains in a very significant way with a flat tax structure. It's just not possible. But number two, even if you did, there's not enough money to go around. The rich collectively are not as rich, are not as wealthy as many people think. They certainly wouldn't be able to cover so many of the deficits and the debt that countries around the world face. Again, I'm speaking for myself in Canada. I'm speaking for the United States. It's just not a solution. And this to me is that slow creep of communistic thinking that I wholeheartedly reject. If you raise the capital gains tax to whether it's 39% or 43%, it's not going to solve any of the problems. So I'll leave it at that. I don't want to get more into the political realm of things here. Let me know your thoughts about that, guys, in the comments below. But let's kind of shift a little bit more now into cryptocurrency. Altcoins, I'll let you guys know which projects I'm excited about and which ones I picked up on this very significant dip that we've been seeing. This fire sale, as I like to look at it. Okay, in the news here, we have REEF Finance, the gateway to DeFi, decentralized finance. With this update, VeChain Mainnet, the blockchain for next-gen DeFi dApps, decentralized applications, is coming out this May. Yes, the time to reveal the industry's first blockchain built exclusively for dApps is here. And we're all excited to share the deets, the details with you. Read more about it on medium.com. Continuing here, it's actually a longer thread. Let's just take a look at the second post. VeChain has been built with cutting-edge technology to power the dApps of the future and offer seamless migration to the existing dApps. It's EMV compatible, allowing developers to port their dApps from Ethereum without code change. You guys can read the rest of the thread here. I'll link to it in the description below. You can also check out the Medium article, which is available here. As I mentioned earlier, but just as a reminder for those that are new to the space, there are many of you subscribing, many new to altcoins and cryptocurrency on a daily basis. Welcome, first of all. And as a reminder, you can always check out the links, the resources that we cover. I include them in the description below. Here we have Maxim Blagov of Enjin at Max Enjin UX preview of Enjin Wallet 2.0, a wallet to rule them all. Nothing stops progress towards perfection. Of course, we have our bias. Enjin has been a longtime partner of the channel, but I gotta say, in terms of simplicity, in terms of ease of use, Enjin really is one of the best out there in terms of that path towards perfection. And believe me, we've sampled and reviewed and tested and stress tested hundreds of different wallets. Enjin is our favorite for a reason. So here's a little preview of the new Enjin 2.0 UX here. I don't have any more information than that at the moment, but let's stay tuned, and I'm excited. We're expecting something pretty special here. All right, kudos and best of luck to the team. This is just a piece of FUD that actually got misplaced here in my tabs. NatWest will refuse to serve business customers who accept cryptocurrencies. All right, how about cryptocurrency holders refuse to do business with NatWest? Have fun being a dinosaur. Sorry, that was a little bit disjointed there. I just kind of misplaced it, but what a ridiculous statement to make. Yeah, NatWest refuses to work with clients who have Wi-Fi routers at home. NatWest refuses to work with clients who have made the transition to indoor plumbing over the course of the last several centuries. NatWest refuses to work with clients who use internal combustion engines. What a dinosaur joke. What kind of a business makes that decision? I never understand some of the press releases these businesses make. Like, they just shoot themselves in the foot. Okay, moving right along to one of the projects I picked up on the dip yesterday, Chainlink. At Chainlink here is the official channel. SushiSwap has integrated Chainlink price feeds live on Ethereum and Binance Smart Chain to secure their new Kashi lending platform. Anyone can leverage Chainlink's extensive collection of time-tested price oracles to quickly launch an isolated Kashi lending market. Chainlink is down significantly, down 18%, despite the fact that, I don't feel that this is justified necessarily per se. Again, Bitcoin dips and altcoins dip harder. Some of them have dipped harder and more deeply than others. I think Chainlink has been one of those. And my point of view, not financial advice, but my point of view is if I'm excited about Chainlink, if I know it's just recently hit an all-time high here of $44.15, and nothing, at a fundamental level, nothing has changed about the project. Same team, same ambition, same revolutionary Oracle-based cryptocurrency that's going to change the world as I see it. Same 2.0 white paper that just came out with 136 pages of revolutionary ideas. What's changed? What has changed? The only thing that has changed is the price. And if they're offering me a 15, 20, 25% discount, which I think is where I picked it up, somewhere in the high 20% discount range, then why not? To me, I'd be an idiot not to pick it up. Not financial advice, but that's how I operate. I did the same thing for VeChain, which is trading now at just under 18 cents. It's down 21.3%. I actually longed VeChain late last night on Binance Futures. I saw at one point, and it was just kind of the way the numbers lined up over the course of the 24-hour charts, but I saw VeChain was down something like 37% over the course of a 24-hour period. This is, again, on Binance Futures, trading VET against USDT. And that was the most ridiculous thing I've ever seen. VeChain, again, similar to Chainlink, on the heels of its all-time highs set just recently. All-time high set 4 days ago now at just over 28 cents. I saw it go down on the futures charts to 15 to 14 to 13 cents. I picked it up for a quick long. I made a little bit of cash, a little bit of money. I didn't get too greedy and cashed out. And also picked up some VeChain as more of a long-term hodl. Again, I'm not saying you guys have to do this, but if you like a project, if you are already behind something, you're convinced, and then for reasons that have nothing to do with the project, that have everything to do with Bitcoin volatility and Biden tax proposals, if your project dips 10, 20, 30, 35, 40%, I mean, VeChain dipped nearly 40%. Again, if nothing has changed and you're still in love with the project, why wouldn't you just pick it up at a discount? I actually heard another YouTuber, I'll give credit here to Christopher Green, that I was following years ago for more, I guess, like conspiracy content and stuff, which I love. I'm a glutton for that. And I think a lot of it is actually a little bit more legitimate than we give it credit for. But that aside, he made a great point. He said, if you're in the market for a sports car, you want to buy a Ferrari, and the Ferrari goes on sale 40%, do you turn your nose up at that discount? Again, assuming there's nothing wrong with it, or do you go after it? Do you actually go after the deal and say, hey, this is a great opportunity. I'm going to avail myself of a 40% discounted Ferrari. And for whatever reason, when it comes to assets, when it comes to stocks, we have a very different psychological approach. And I think it often fails us. I think our instincts and our emotions in trading often fail us. And we have to, at least in my opinion, we have to be a little bit, contrarian in our approach to these kinds of things. So I'm not telling you guys what to do. It's not financial advice, but I picked up a whole lot of VeChain yesterday. And it paid off. Going back to that Chainlink story here, again, a little bit of a narrative choppiness, but if you want to check out the news regarding Sushi integrating Chainlink price feeds to secure Kashi lending and margin trade markets, you can check that out here on medium.com. Okay, we're looking now at an old favorite that has remained on our radar. If you remember our Altcoin Buzz podcast channel, we actually interviewed David Freuden of XinFin a couple of years ago. That should be popping up above me right about now. I'll also link to it in the description below. And they have a lot of interesting updates that I think are worth discussing. This has remained on our radar for a lot of reasons. We think this project has a lot of merit. And although our Altcoin Buzz podcast channel was discontinued, unfortunately, it kind of paved the way. It was like a bit of a precursor for the spotlight interview segments that Leia is doing right now. But there is a lot to discuss here when it comes to XinFin. They're in the news once again in some exciting ways. Let's take a look at their website here. We're on xinfin.org. Okay, so if you watched that interview, that long-form podcast discussion with David a couple years ago, you may remember some of this. XinFin is a hybrid blockchain tech protocol that's focused on international trade and finance. Very importantly, it's both a public and a private blockchain, which offers users the ability to digitize, tokenize, and instantly settle trade transactions. This set of features reduces reliance on external FX products, bringing simplicity and flexibility to users. XinFin combines the use of public network while also meeting the needs of both data visibility and auditability for larger institutions, serving the needs for both public and private institutions. It's an important differentiation. The XDC coin sits at the core of the protocol. The XDC protocol is designed to support smart contracts and can facilitate 2,000 transactions per second, or TPS. 2-second transaction time, KYC to master nodes and validator nodes, to offer a powerful platform that is suitable for both enterprise and retail use. The XDC protocol utilizes the XinFin Delegated Proof of Stake, or XDPOS, consensus mechanism, which is designed to create a highly scalable, secure, permissioned, and commercial-grade blockchain network. 2021 got off to a slow start for XDC due to a hack of the Alpha EX exchange that happened in December of 2020 and unfortunately saw 300 million Ethereum-based XDC or XDCE stolen and sold on the open market. However, a series of steps were taken to mitigate the effects of this hack, which included the burning of 500 million XDCE and the decision to eventually phase out the XDCE contract and focus solely on the XDC token. Following the community resolution of the hack, XDC's price has exploded to a new all-time high of 7.6 cents earlier in April, thanks to protocol upgrades like the ability to send tokens while offline and XinFin to Corda bridge that enables XDC to move freely between the Corda network and XinFin. XDC has also benefited from being listed on multiple exchanges, including Liquid Global and Probit, as well as the launch of a regulated index for XinFin digital assets by the regulated index provider Vinter. And so XinFin really does offer a new use case for blockchain, helping MSMEs in a liquidity crunch. They're achieving a transcultural, wide-reaching, user-friendly financial experience with the XDC network. They understand that globalization is the trend and the financial system is the next domino to fall. One world, one financial ecosystem. XinFin is ready to benefit based on that assumption. The XDC network is perfectly positioned to meet the hybrid blockchain needs in the massive trade finance sector. And the future where blockchain networks connect and integrate seamlessly featuring the XDC network is going to become more and more prominent. This creates opportunities for payday loans, mortgage origination, and auto loans on the XDC network. Of course, as we do, they feel that blockchain is here to stay, and there are many advantages of a regulatory compliant blockchain protocol for institutions. You guys can check out that website. It is xinfin.org. You can also check out this piece on Cointelegraph.com. Enterprise blockchain solutions rally as businesses get hip to crypto. XRP, Stellar, and XinFin see tremendous growth as enterprise solutions that offer cross-border solutions and serve the unbanked gain traction. It comes as no surprise. Yahoo Finance here. XinFin's XDC becomes the leading token of value on the Corda network thanks to the DASL crypto bridge. All of this, guys, you can find links to in the description below. Just want to mention a few other stories here before signing off for the day. The big burn option has won the vote. This is courtesy of PancakeSwap at PancakeSwap on Twitter. That means starting tomorrow, every trade made on PancakeSwap V2 will contribute to burning cake and reducing emissions. More cake will be burned than ever before. PancakeSwap burning record amounts of tokens. Same with Binance token. Pretty impressive, I gotta say. That to me is one of the best ways in this space to put your money where your mouth is. Labs Group, which we featured recently on our series of 100 times moonshots videos. We're excited about Labs for good reason. Go back and check out those videos if you want to learn why. NFT Friday is here, non-fungible token. Don't forget to check your wallets for your Labs NFT membership card release. Special shout out to the first auction contributors who've been with us from the start. We have much more in store coming soon. I believe it. Tyler Winklevoss here with this update. You can now use Apple Pay and Google Pay to buy Bitcoin and other cryptos on Gemini. Read more about that on Gemini.com. Kudos to Tyler Winklevoss here, who's helping us out with mass adoption. Also, I should say kudos and thank you to Cameron. Of course, they're a dynamic duo. Blog.coinbase.com. Tether USDT is launching on Coinbase Pro. Not the most exciting story that we had today, but nonetheless from the 22nd of April, still something that is noteworthy, at least to mention. You guys can check out the full write-up here. We're on blog.coinbase.com. Hollywood elite will receive NFTs, non-fungible tokens, in recognition of upcoming awards ceremony. Just when you thought the NFT hype was kind of cooling off, it was on its way down. No, among the digital artwork is a piece created as a tribute to late actor Chadwick Boseman, with the proceeds from the auction benefiting the Colon Cancer Foundation. Well, at least it seems to be for a good cause, at least ostensibly. So you guys can check that out. News here out of Huobi Group. They've launched 4 crypto funds targeting $100 million in assets. Huobi Technology Holdings, part of Huobi Group, which includes the leading Seychelles-based cryptocurrency exchange. Huobi Global has launched 4 digital currency funds targeting $100 million in assets by September, thereby paving the way for a broader institutional adoptions. A lot of positive story, guys. I know I'm kind of rushing through them rapid fire style, so you can check any of them out at your own discretion if they interest you, but there's too much good news. And that's the thing, even on a down market day, even when projects are down 15, 20, 25, 30, 35% or more, there's still plenty of good news in this space. There's no shortage of good news. CoinGecko here, finally. We got this week's top 30 trending coins. I don't know if you guys want to see this right now, but this was a week of both extreme highs and extreme lows, going back even just a few days. Dogecoin, probably no surprise there, sitting at number 1 spot. They've also got BNB, Cake, PancakeSwap, VeChain. VeChain hit a new all-time high, of course, recently, following right behind. Which of these coins do you have your eye on? I only bring this up kind of to highlight the fact that it is a volatile space. And to me, volatility is not a bad thing. Don't forget, we started the video with Michael Saylor. His contention, his point of view is that volatility is vitality. Because even if a project is going down and you can predict it, you can enrich yourself very significantly. And if a project is down 20, 30, 40, 50% for no good reason, you can enrich yourself as it regains its upside momentum. Not financial advice, that's just my point of view. So the question I will leave you guys with here as we finish up the video, all of these top 30 trending coins here. You have your Dogecoin, you have your Binance coin, you have your VeChain, you have your Chainlink, you have your Ethereum, you have your Cosmos, you have your Polkadot, Cardano, all kinds of other ones. Have you picked up any of these on the dip? And if the answer is no, that's fine. There's no right or wrong here. I'm just curious, what have you been shopping for in these last 24 hours, given the incredible sales that we've been seeing? Is there one of these on the list that you've picked up at a discount? Maybe you've opened a long position. When it comes to longs and it comes to leverage trading, I do dabble in that, although I kind of discourage others from doing it because I do it in a way that I would personally view to be pretty conservative. If you're not conservative, if you're not disciplined, not that I'm some guru, I'm not, but it's easy to kind of to run away with some very appealing promises when it comes to leverage trading, and then it's just all too easy to get wrecked. You know, there's this promise, there's this idea of making a lot of money very quickly, but the reality is that 95% of people just end up losing money. So I did open a couple of longs. I mentioned VeChain earlier. I picked up a couple projects as well. If you've done the same, let me know. Share your picks with me in the comments below. But guys, it is Friday. TGIF, there's always so much happening in the space. My recommendation, therefore, is that you follow us, continue to follow us on all the regular social media channels. By the way, I didn't mention it today, never financial advice, but you should follow us on our Trade Signals Telegram group. That is not financial advice. It's a collective discussion about chart analysis, price analysis, updates with regards to your favorite altcoins. And it's just kind of a like-minded, broad group discussion about projects that you're probably following anyway. So that's our Trade Signals Telegram group. I always pin that to the top of the comments. You are very welcome to join if you'd like to be part of that discussion. None of this is financial advice. You guys know that. However, I do wish you all the very best of luck if you do choose to invest. Have a great Friday, members of the Altcoin Buzz Army. A great tail end to your week. TGIF, have a great start to your weekend. As always, we hope to see you again soon in our next video. Take care.